Hey there. Imagine this. Bob just invented a robot that folds laundry perfectly. Every sock, every hoodie, even those weird fitted bed sheets that make grown adults cry. He calls it the Sock-o-Matic 3000. Now Bob's friends, Alice, Raj, and Tanya, all think it's genius. But Bob's got a problem. He needs money. Not like buy a pizza money. We're talking serious cash to build a factory, hire people, maybe even pay a lawyer so nobody steals the Sock-o-Matic idea. So what does Bob do? He could ask his rich Uncle Larry, but Larry's already invested everything in llama yoga. Don't ask. That's where the stock market comes in. It's basically a giant group chat where businesses go, hey, want to help me grow? I'll give you a tiny piece of my company in return. People call that piece a share. And the place where you trade those pieces? Yup, that's the stock market. But wait, why not just get a loan from a bank? Well, banks are kind of like they want to know everything about you before they give you a dollar. Credit scores, business plans, collateral, and even if they say yes, you've got to pay them back with interest. But the stock market, it's like crowdfunding for grown-ups. Bob can say, I'll give out 1,000 shares of Sock-o-Matic Inc. at $10 each. That raises $10,000. Now he doesn't owe anyone money. He just owes them progress. Because when you own a share, you're technically a part owner. Congrats. You now co-own a robot laundry empire with 999 strangers and possibly a cat named Muffin who clicked buy on accident. Here's the catch. Bob's no longer the only boss. If things go well, everyone's happy. Stock price goes up. Investors cheer. Maybe they even tweet about it. But if Bob spends all the money on gold-plated laundry baskets, the stock tanks. And the investors, they're not mad. They're disappointed. Now multiply this story by thousands of companies. Tech firms, car makers, cookie brands, even companies that make the machines that put the cream in the middle of Oreos. All of them need money to grow. And regular folks like you, me, or Muffin the cat get a shot at owning a slice of it. Sounds kind of cool, right? But why would anyone risk their money buying a slice of something that might flop harder than a 2006 boy band reunion? Because asterisk reward asterisk. If the company wins big, so do you. Buy low, sell high, that's the game. It's like planting a mango tree. You buy the seed, aka the share, wait, and hopefully one day, boom, mangoes everywhere. Or at least enough for a smoothie. But it's not all sunshine and smoothies. Sometimes the mango tree gets hit by a hurricane, or Bob's robot starts folding socks. CAD too well and triggers an underwear revolution. Markets go up and down. And nobody, literally nobody, knows exactly when or why. People try to guess though, like Alice, who now thinks she's a financial wizard because she bought shares in a bubble tea company before it went viral on TikTok. But that's the thing. The stock market isn't a casino. It feels like one sometimes, especially when memes and emotions get involved. But at its core, it's just a giant swap meet of ideas, money, and hopes that someone else sees the same future you do. Now, you might be wondering, wait a second, if companies get money by selling shares and people make money by selling those shares later, where does the money actually come from? Like, who's paying me when I make money in the stock market? And that's where things start getting really interesting. Because when you make money in the stock market, like you bought a share for $10 and sold it for $20, that extra 10 bucks didn't just magically appear. Someone else bought it from you at that higher price, which means they now believe it's worth even more than $20. Or maybe they were just panic buying because their cousin Dave told them, this stock's gonna moon. Either way, the money you make comes from someone else's decision to pay more than you did. That's the game. It's not the company handing you a $10 thank you card. It's a big old marketplace of bets, beliefs, and sometimes pure vibes. Now, there's another way to make money in the stock market that doesn't involve selling your shares at all. Dividends. Dividends are like your slice of the profit pie. Let's say Bob's Sock-o-Matic company is crushing it. Sales are booming, socks are folded, the world rejoices. Instead of hoarding all the profits, Bob might say, hey shareholders, here's a little thank you check just for holding onto our stock. That's a dividend. Not every company does it, but the ones that do, they're basically the grandma of the market. Predictable, stable, always handing out something sweet. So now you've got two main ways to benefit. One, selling your stock at a higher price. Collecting dividends while you hold pretty neat. But let's zoom out a bit. Why does society even need all this? Not just let Bob and his Sock-o-Matic rise or fall on their own without dragging everyone into it. Because the stock market isn't just about investors, it's about jobs, growth, innovation. Think about it. Without the money Bob raised, there's no factory. Factory, there's no workers. Without the workers, there's no sock folding robots. And companies grow faster when they have access to investment. That growth creates more stuff, more services. Well, then you get Sock-o-Matics, mango smoothies, and maybe, just maybe, a retirement plan that doesn't involve eating instant noodles forever. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.